Good evening. You're watching Rebooting India. I'm Shweta Rajpal Kohli. A lot of action in the world of business and economy. Let's start with the big corporate story of the day. The marriage of Bharti and Wal-Mart coming to an end. The 6-year-old partnership between the world's largest retailer Wal-Mart and India's Bharti Enterprises has now been officially called off. It was a deal that was marred with government probes and corruption allegations. Both companies together operated wholesale retail stores. They will now pursue their plans independently. This is how Wal-Mart will buy Bharti's share in the joint venture that operates the cash and carry stores where only shopkeepers or local retailers are allowed to buy and not you and me. This will give the American retail giant 100% ownership in Best Price. But remember, if Wal-Mart wants to go in for a retail route, it will need a local partner and will have to now scout for a local partner. Bharti, of course, will continue to operate the Easy Day retail stores. Rajan Bharti Mittal, Bharti Enterprises Vice Chairman and MD, said that Bharti is committed to building a world-class retail venture and will continue to invest in Bharti retail across all formats, saying that he believes that with the current footprint of 212 stores, Bharti has a strong platform to significantly grow the business and delight customers. And Scott Price, President and CEO of Wal-Mart Asia, also said that given the circumstances, Wal-Mart's decision to operate independently will be beneficial to both parties. Through Wal-Mart's investment in India, it wants to serve India and its people and continue to make important social and environmental contributions to the country. He says Wal-Mart will continue to advocate for investment conditions that allow FDI in multi-brand retail in India. Joining us for more on this and the impact on Indian retail, Sushil Patra, Associate Director of Technopack Advisors. Mr. Patra, your first response to the development, it was expected, but can we say it's a big setback to both the parties?
I would not say it's a big setback for both the parties, given that nothing much was happening over the last 12 months or so, and whatever plans were announced did not actually fructify on the ground. So it at least gives both the parties the opportunity to grow the independent businesses that they now will operate over a medium period of time. And as clarity evolves in terms of the policy side, they can either, Wal-Mart can either look for a new partner, or both parties can either go for new partnerships and grow their businesses.
But Mr. Patra, the fact remains that if Wal-Mart decides to start its retail operations in India, it will now have to scout for a new local partner. There has been a lot of uncertainty with regard to FDI and multi-brand retail. Also, given the fact that the government has put in sourcing requirements, do we really see FDI and retail taking off the way the government had expected it to, given sourcing conditions and particularly for Wal-Mart, given the kind of allegations it's been facing in the Indian market?
What we think is that currently parties would not get into at least Wal-Mart will not get into the front end. They could probably focus on the wholesale cash and carry business, which also gives them the opportunity to set up the back end over the next couple of years till at least some clarity comes up post the election in terms of where the front-end retail policies are going to move, and thereafter over a period of time when they have set up their backends and sourcing channels and linkages, they could possibly think of getting into the front end over a period of time. So it's not necessarily a negative thing. At least in terms of answering your question as to whether it creates a negative impact, nothing much was anyways happening in the last 12 months, and it does send a negative signal to the global retailers.
All right, a negative signal there, but at least this was a partnership that we did think will come to an end, given the fact that there wasn't very much happening with regard to this joint venture over the last year or so. Wal-Mart, of course, had been facing a number of allegations over corruption as well as lobbying. Many thanks, Sushil Patra, for joining us and sharing those views. The other big story in the world of business and economy, India's trade deficit has narrowed to a 2.5-year low in September, raising hopes that there will be a significant significant reduction in the country's large current account deficit, which helped send the rupee to a record low in recent months. India's trade deficit has narrowed to $6.7 billion in September, compared with $10.9 billion in August, and it's the lowest since March 2011. The government has taken many steps like fiscal incentives for exporters as well as higher duties to discourage imports of gold that has helped actually shrink this overall trade deficit. The import bill on gold and silver shipments, which is really one of the biggest items after petroleum and crude products in the country's import basket, has moderated to $800 million in September. And let's see how much we've seen that trade deficit shrinking. It's been a sharp dip that we've seen, especially look at the May figure, that when we had seen the trade deficit touch a high of $20 billion, it's now down to $6 billion and has been, in fact, gradually coming down. In August, it was $10.9 billion.
Imports have shown a significant fall of 18.1%. and exports have shown a rise of 11.15%. Trade deficit for the month of September 13 is the lowest in the last 30 months. Going forward, I am confident the import containment measures put in place by government for non-essential imports is playing out extremely well, and we need to continue this so that our rupee becomes stronger.
Let's take a look at how the stock markets ended the day today, especially celebrating those narrower trade deficit numbers. The Sensex regaining the 20,000 mark and closing well above it, 265 points in the green. Continued buying activity that we saw after the trade deficit narrowed to a 2.5-year low in September. The Sensex rising 265 points. The Nifty also ended up nearly 80 points. So we had healthcare, capital goods, banks, realty, some of those stocks that really did well in trade today. The Indian rupee, of course, has been the big focus, and that's been the big worry with the current account deficit number as well. Ending week at 61.93. It did fall past the 62 to the dollar mark today, but finally ending at 61.93. But is the lower trade deficit something that we can see as a sustainable trend? Madan Sabnavis, Chief Economist of Care Ratings, now joins us to try and understand whether we should be celebrating that trade deficit number or not. Mr. Sabnavis, we've of course seen a welcome relief coming in with the trade deficit narrowing, but there are fears that with festive demand picking up, gold imports may increase and we may not be able to sustain it.
Yeah, absolutely. If you see the trade numbers for the month of September, I think there are 2 points which emerge. One is, of course, all the measures which the government has announced to control the import of gold has definitely worked. But it's also been fairly fortuitous because this is typically the period when the demand for gold is also low because we're away from the festival season. And the festival season will be starting from October onwards, when typically the demand for gold goes up for Indian households. In fact, if we look at some of the estimates given by the World Gold Council, it does appear that demand is going to revive in this particular quarter. So we need to wait and watch whether there's going to be again pressure coming in from the import side. Because while gold in rupee terms is definitely going to become more expensive on account of the depreciated rupee, we should also remember that the international price of gold has actually come down. So there have been certain countervailing effects in terms of the price advantage. The second good thing, which has been the second point in terms of the trade deficit, is of course that exports have been growing by over 10% for the third successive month, and this could be seen as a kind of a turnaround which is taking place, because when it happened the first month we felt we should be a bit cautious before we really think that things have turned around. And now it does appear that more on account of the rupee depreciation during this particular period of time, there's been a certain advantage which we have gotten in terms of competitiveness, which has helped exports to increase.
All right, I'd like to also get your reaction on the International Monetary Fund sharply revising downwards India's growth forecast for 2013, taking it to 3.8%. This compares against 5.6% that IMF had projected in its July forecast. Is that a figure you agree with, that India's economy would slow to as much as 3.8%?
No, actually, we need to look at these numbers a bit carefully, because the IMF and the Indian government used different concepts of GDP. Now, when the IMF is looking at GDP, they're looking at GDP at market prices rather than at factor cost. So that's the reason why there's this variation in their growth forecast. Because if you look at the 3.8% number which they have, the comparable number last year is 3.2%, whereas we know that our GDP grew at 5% at factor cost. So against 3.2%, they're actually talking of a growth of 3.8%, and the figure which is closer to our 5%, they're already talking of 4.25%. So they're talking in terms of a kind of a slowdown in terms of factor cost GDP, but in terms of market prices, actually we're going to be better off than that of last year. We ourselves at CARE are looking at a number of around 5 to 5.1%, but this would be again be at factor cost.